All right, party people here on the interwebs. We're on YouTube. We're on Facebook. Live. Interesting times. Interesting times. We're going to talk about the rate formation that has been setting up in mortgage bonds. I've been talking about this for a couple of weeks. Market cycles. Important to note how emotions play into this. And inflation, is the worst of it behind us. More evidence that they don't want you to buy homes. We'll talk about that. And, stocks have done extremely well since Goldman put this out last week. This was on Friday. And I've been waiting to talk about it. I want to see what would happen. Because, Goldman, you have to take what they say with a little bit of a grain of salt. They always hold something back for their big investors, but they also have to constantly put out predictions and information. And they need to have a good track record. So a lot of times they won't say something unless they're pretty sure about it, and it's something that's pretty basic. Goldman says signs that inflation is peaking could be positive. This is worth the read, by the way. All of these ones are ones that I think are worth the read. That's why I share them. But I do want to discuss this. Derrick Evans here, VA Home Loan Specialist, NMLS 155010. Give me a call, shoot me a text, or an email if you want to buy or refi, or see if you're getting a good deal on a loan that you've already been disclosed. Because if you don't like it, hated it, there's always a better way.
Yeah.
All right. So let's take a deeper dive here into this and get myself out the way, yo. First and foremost, I think I mentioned was mortgage rates setting up for a dip. How could you say such a thing, sir? What are you, crazy? Well, if you've been following, you've seen that I've been calling this for quite some time now. It's reverse head and shoulders that is setting up in mortgage bonds, okay? And it's really picture perfect. It really, really is. If you look at it here, just, okay. Now, remember what I said, and these are almost exactly online. I mean, it's the bottom here on these, it's a straight line. Textbook, reverse head and shoulders, a very powerful pattern. And I told you if this was going to happen, this is what it would look like. It would go up here, we would break through that resistance we were in for a while, at some point, come back down, retrace to this level, and that's exactly where we are. So far, so good on the overall formation of this pattern. Now, this could break down. I could be totally wrong, right? That's entirely possible. But if they're right about the inflation stuff being behind us, here's another one that was interesting. The Fed's favorite inflation measure rose 4.9% in April. And a sign that price increases could be slowing. How is 4.9% rise a sign that prices could be slowing? Well, this PCE headline rose just 0.2% versus in March rose 0.9%. And remember, this is what I was talking about. Once we start to see the deceleration of the increases, that's the first sign that you are going to get, a reversal on this. The first sign, because it doesn't just immediately about face and go, oh, it went from positive to negative. Not how it works. It's going to go from big positive numbers to smaller positive numbers to flat, zero, to small negative numbers to smaller negative numbers. That's how things move on these big macroeconomic scales. So those kinds of things are really, really positive for bonds because bonds hate inflation. They hate it. They hate it. They hate it. Also, watch herd mentality on everything. This has been the best investment, not advice, but the best investment mindset that I could, if I could give one thing to you, it would be this. Note that your emotions when it comes to investments are almost always exactly incorrect. The reason for that is because these markets are all manipulated. And you are the one being manipulated. And they are taking advantage of your emotions. A couple recent examples. Tesla. When the stock got to $1,000, me, Kevin, was bragging about how he had 16,000 shares, and it was, it was just kind of going crazy. And my emotions were like, I have to invest in Tesla. I can't not invest in. They're making robots. It's going to be amazing. It's crazy. Elon Musk is the best investor of our lifetime. My emotions wanted to get in so bad, but I've learned when my emotions are talking that I've got to do the opposite. I didn't short it in this case, although I should have because it was at $1,000 and now it's not. I think 750 or 770 today. Got into the 600s. So I would have been smoked if I had listened to my emotions and started buying Tesla at 1,000. Didn't short it, should have, didn't. It's okay. So those types of things. When you start to see people as a whole say, we don't want that, that's usually when the best time to buy it is. You look at what's going on with cryptocurrency right now. And this is Gemini, who I've promoted Gemini and the Gemini US dollar on here before, which is, the Gemini website, cryptocurrency exchange, is owned by the Winklevoss twins. They cut 10% of their sales. They say the crypto winter is here. I see things like this, and to me, this looks like bottom signal. When everyone is like, I don't want it, that is when you want to buy it. If you are buying things when everyone else is wanting to buy them, that's usually the top sign of a market. Same thing on the other way. If you get a feeling, if you get the emotion that, gosh, I just got to sell it. I can't take the pain anymore. It's gone down too much. I just want to take the money I have left and just want to go do something else. When you get that feeling, note that feeling typically is the sign that you should actually be buying. Like I had a buddy tell me that one time. It was during the crash. It was Ford stock. And he said, man, I can't take it anymore. I got to sell. He's like, I can't believe how far down it is. He's like, I can't believe I'm selling this Ford. I bought it literally because he said he was capitulating. And that is how it works, and made a ton of money on that trade. It was great. But the point is, your emotions are almost exactly always wrong. Almost always exactly wrong. To the extent that if you feel like you need to sell, then you probably should be buying. If you feel like you need to buy, you probably should be selling. That's just stocks. That's like trading information. We're talking about real estate here, right? I'm making a point because I want to look at something here. Let's look at this. Making a point about how emotions guide and gauge things. Because what we've seen as buyer sentiment now is really waning. It is. Does that mean that it's a bad time to buy, though? Is the question. That's the question. Is it a bad time to buy because people as a whole don't really want to buy as much? A lot of people exiting stage left. Had a young couple, newly married. They, okay, we're going to get pre-approved, had conversations. Said, you know what, we're going to rent for a year. We're just not quite ready. We're going to kind of save some more money. Well, what does that look like if I decide to rent for a year? I pay $4,000 a month in rent. So it's $50,000. Just absolutely gone.
Check, please.
Just gone. $50,000 is gone the next year, which means that prices would need to go down by $50,000, assuming rates stay the same, in order for you to be in the same place. So when you rent, you're really making a bet that values will go down. And they could be right. Could be right. But I don't think so. However, I don't think we're going to see these kinds of numbers. And that's the thing that I believe is the cause for the wane in buyer sentiment and activity. Is that, for 2020, we're up 20%. 2021, we're up 20%. Those kinds of things make buyers feel like, well, I'm really missing out. I'm really missing out. And if I wait any longer, I won't be able to buy anything. So I need to get serious here. Because for whatever reason, the traditional reasons to buy a home, hedging your housing costs, tax deductions, paying principal, appreciation opportunity. The only thing that anyone hears about that is appreciation opportunity. They're not focusing on paying down principal. They're not focusing on tax deductions. So if we did the math on that, I want to do this, but I'm going to click on something and the wrong thing is going to come up. And I already know it. I should have done this beforehand. It's my bad. But basically, if you pay, let's say $50,000 a year in rent, if you had been paying that toward a mortgage, a certain portion of that is going to go to interest or to principal. Let's say 10%. So $5,000 of your $50,000 goes to principal, and then the other $45,000 goes to interest, which you get the tax deduction on, and so you're going to get about a third of that back if you're paying 33% tax bracket. So that's $15,000. So $5,000 was paid down on your loan, and then $15,000 in net tax benefits. So out of the $50,000, you actually pocketed like 20. Saved you 20 hard net dollar, 20,000 hard net dollars out of the $50,000 if you're renting for $4,000 a month. This is a simple example, and that doesn't include appreciation. We're just taking that out of the equation because for some reason this is what everyone is making moves on, is based on just appreciation. So buyers right now feeling like the appreciation run is done, And that's why they're becoming exhausted. That's why I think buyer interest is waning, because people believe that is over. And not only that, because there's so many crash mongers out there, they actually think that, you know what, I don't want to buy a house that's going to go down in value. I don't want to buy a house that, you know, a year from now we look at and go, gosh, we should have just waited. So that's what people are thinking. That said, how are we seeing people get good deals? Yeah. If I just look at what buyers, and I'm going to give you my opinion on this part of it here, because I don't have data for this. This is just me working the ground level, street level with buyers day in, day out. I see buyers getting great deals right now just because there isn't the same frenzy there once was. Example, one fell out of escrow, appraised for $741,000. They needed a buyer to step in. My buyer steps in, gets it for guess how much? $675. No! Got appraisal for $741. Why? Because there just isn't that frenzy of buyers. Buyers are just kind of like, meh, because they don't think they're going to get this number. Home prices surged in over 20% in March as interest rates also rose. March, that's 2 months ago. It's June. What about April and May? We'll see. That's the problem with all this data. It's lagging. That's why I'm trying to give you my opinion, because I am real time. Real time this is happening. I have a buyer who's buying a house that was appraised for $741 for $675. The seller is still making money. Is that a comp bomb? Maybe. Maybe that's a comp bomb. Maybe the people of that neighborhood and that area will now have lower home values as a result of that one. It's possible. Possible that could start to impact things if enough of that goes on. But did the buyer lose? No. The buyer's walking into a home that appraised for $741 and they're getting it for $675. So you tell me, is that bad for buyers? Is it? I don't think so. Here's another piece of evidence. Exhibit 1 million. I saw this article and just had to. Can't even remember where I saw it. But it's a Zillow article. And I don't have anything against Zillow. I mean, I don't love it.
Hated it.
No, it's fine. It's fine. But 16 alternatives to buying a single family house. Why is it, you tell me, why is it they are so dead set on propaganda against you buying a home? Why don't they want you to buy a house? Why don't they want you to own something? You will own nothing and you will be happy. That's why. They want to own it. It's one simple reason. The rich people, the elite people, they want to own all the houses. Wall Street, they want to own all the houses. That's going to be their thing. And they're scooping up properties in huge quantities still. So, long story long. Interest rates hanging in there, even though we had a pretty sharp 2-day decline here. We're right at that moment. I'm expecting movement. Tomorrow is going to be crucial. This could dance around for a little bit, before moving up to form the nice shoulder over here. Or it could just straight go. Either way, it works. And if it does, the key line to beat is this red one right here, and we're off to the races. I don't know if that'll happen or not, but I am expecting rates to improve over the course of the next week or two. That's my expectation. I could be wrong, but I usually get these things right. So rates set to dip. Be prepared. Be ready to pull the trigger should the opportunity arise. If you're in escrow, I have some people who are just getting into escrow and stuff like that. I'm letting them know, hey, look, be ready. We may need to jump ship. We may have to go from this bank to that bank because you know what I'm here for.
All we want to do is pump you up.
Lowest rate. So there's that going on with rates. And as far as buyer sentiment waning, I just want to make the point that are the buyers who are exiting the market, are the buyers who are saying, I don't want to do it, I'll just keep renting, is that going to end up being a smart move or not? It could be. It's possible. It's possible that is a good move. It could be. But I don't think so. I think what's happening right now where buyers are actually getting a chance to control some of the narrative here. Still a seller's market, by the way, but buyers are getting to dictate some things, getting to dictate terms, getting to get offers accepted, getting to get requests for repairs entertained, not having to waive appraisal contingencies, not having to waive inspection contingencies. Those are good things for buyers. As much as the media is going to try to tell you not to buy a house, they're dead set on this. This narrative is coming from every direction. And as much as we know and understand market psychology, when everyone doesn't want it, that's usually the best time to buy it. Whatever it is, that could be crypto, that could be stocks, anything. When people are at a point where they don't want it and they don't like it, it's not hot anymore, that's when you want to buy. When everybody wants it, that's when you're typically toward the top. When it comes to real estate, we know that long term it works. Can there be intermediate pullbacks? Of course. Can there be neighborhood pullbacks? We've talked about that. I expect that. Can there be certain property opportunities like the one I was just discussing earlier? That's a VA buyer buying a place that appraised for $741, $675. Pretty amazing. There's going to be opportunities for buyers in this market. And what happens if someone gets in and they get a 5% or a 4.5% rate today? Is that so horrible? My guess is within a year or two, they're going to refinance that to high twos or low threes. It's my guess. So if you get in, the rate's a little bit higher than it was, then we're used to collectively. We're used to 2-something%, 3-something%. Now people are getting 4-something, 5-something. It feels high because of what we're used to. When we go back to what we're used to, you get to take advantage of that. That's the thing to not forget here. Rates do dip. If you're right, you want to already own. You don't want to try to buy at that point in time, because what happens when rates dip? A lot more people want to buy. A lot more people have more buying power. Prices tend to go up a little bit. It's really interesting because we see prices in real estate do tend to go up as rates decrease, but they don't go down as rates increase. It's an amazing thing. I'll actually do a video about that soon. I'm going to put that on my hit list. I want you to see that because we've gone through the interest rate chart going back to the 70s multiple times explaining that, look, there's no evidence that rising rates causes real estate values to go down. It just isn't. But when rates go low, especially when you hear like all-time lows, rates are at all-time lows, that gets a lot of people talking about it. It gets a lot of people interested who may not have been otherwise. It creates more buyers in the buyer pool, which of course impacts the price that you pay. So you'd be much better off to own a home already and refinance when rates dip than to pay $50,000, $100,000, $150,000 in rent in the meantime to go then try to buy when everyone else is trying to do it. And so this is a lesson for the savvy. Some people will just say, he's a permabull. He's never going to say, don't buy real estate. He's never going to say that there's, a real estate bear market around the corner. Look, I know that there's price reductions going on, price improvements. Sorry. There's price improvements taking place. There's people getting good deals, but I just think that's good for buyers. That's who I represent, buyers. Isn't that what you want when you're a buyer? Don't you want to see price improvements? Don't you want to see a market where you have a little bit more hand in the relationship? That's what we have right now. And if that's what you want, this market's for you. If you want to kind of right now, if you want to go with the herd, not that it's the safe thing to do, but if you want to go with the herd, a lot of the herd is sort of stepping aside right now. Some of it's from frustration. Some of these people were looking for homes when rates were in the low 2s, and now they're in the low 4s, and they're just discouraged. I get that. It's hard to watch prices keep going up, rates keep going up, and you can't get into something. Some people were just flat out discouraged. Some people just got to a breaking point where they had to make a decision. Hey, we have to choose something right now. Okay, we're going to sign a lease. Sign a 1-year lease. See what happens. This type of consolidation that we're experiencing right now in real estate could last up to a year. I don't think it'll last any longer than that. It could be 6 months to a year where we kind of chop around. This person got a good deal. That person got a good deal. Oh, that one sold for $100,000 over list. It's going to be everything. It's going to be everything. There is not going to be, in my opinion, for the next 6 months to a year, there's not going to be one way that you can describe this market. Up until now, you've been able to describe this market in one way. It's a seller's market. It's a crazy market. It's on fire. And it's just across the board. You don't need to explain it anymore. Now that's not going to be the case. You have certain properties that still get 15, 20 offers. You're going to have some that get none. That's just the way it's going to be. It is not going to be a market that dances all to the same beat. We're going to have pockets where things are doing well, pockets where things are not doing well. You're going to have certain homes, certain listings that aren't presented well, and they do poorly because they have poor representation. You're going to see listings that crush, because they have great representation. By the way, if anyone needs a realtor, I never say this, I should say this more often. If you need a realtor, if you need a referral to a good realtor in San Diego or Riverside counties, let me know. I have great agents, great people, amazing people. I love everyone I work with. I don't work with them. I don't like them. So I have great people that I like, people who can absolutely crush for you in every segment of both of those markets. So just reach out to me, send me an email, and I can refer you to one or two or three or however many you want. But if you need help getting connected to a realtor, let me know, because it is no longer going to be the kind of market where you can just pick anybody and just stick it on the MLS and get multiple offers. That's not going to work. Not for most properties. We're going to kind of go back to skills matter, strategy matters, marketing matters. That's what we're going to get back to. So expertise and excellence are going to matter again with your realtor. It's always sort of mattered with the buyer's agents. That's always been crucial. Listing agents have had an easier go of it. It still isn't easy, though, to sell a house that has 30 offers on it. It's a nightmare, actually. But it'll still get sold if you don't know what you're doing. It may be messy, it may be ugly. You may do a terrible job, but the house will still get sold. You may not get top dollar, but it'll still get there. Like in that kind of market, it will. This market we're in now and the one that we're going to be in for a little while, it isn't going to be the case. So, if you need help there, let me know. I'll hook you up. Questions about rates, want to get a quote, want to see what's up with your particular scenario, just submit it. Send me an email, shoot me a text. I need 4 pieces of information: loan amount, purchase price, or the home value if it's a refi, credit score, whether it's condo or detached. And I will get you everything you need to know, get you very detailed information. You can know what's up. If you also need a realtor, let me know. I'll connect you there as well. Get you with somebody good who's going to hustle for you. There's realtors out there that are so good. They do so well. No, they fight for their clients. They do such a good job. They really deserve additional recognition because it is an industry where it's a box of chocolates. I mean, if you take a dart and you throw it at the printed out list of all the realtors in San Diego, good luck to you. Seriously, you will need it. All right, guys. I'm going to call it a day. Y'all have a good one. I'll be in touch soon. Always here if you need me. Take care.